Hi everyone, and welcome back to the channel. Today we're going to show you how a $6,000 tax-free savings account limit can grow into a $1 million retirement account. Now we're using $1 million in this video, but you may need a lot less or maybe a lot more depending on what you want your retirement to look like. How do you know how much money you need saved up before you can retire though? Or how much money you can spend once you stop working without having to worry about running out of money? If these are some questions that you'd like to know the answer to, we'll include links in the description to some helpful videos that will help get you started. If you're just starting to invest, one of the best accounts that you can use is a tax-free savings account. Any money you make inside of the account grows tax-free, and you also don't have to worry about a tax bill once you start taking the money out. You also don't need to worry about your TFSA having any impact on income-tested benefits, like Old Age Security once you turn 65, or the Canada Child Benefit if you need to take out money before retirement. So how is it possible to grow a $6,000 limit into such a large investment account? Well, your first step is to invest your money, and we don't mean investing in high-interest savings accounts or promotional GICs that you often see during the TFSA or RSP season. One of the biggest mistakes that you could make with your tax-free savings account is using it just as that, a normal savings account. While you might be tempted to take up your bank on their offer of locking in your money at some promotional rate, like 2% for example, we're about to show you how much profit you're leaving on the table. Let's assume instead you invest your money in a combination of stocks along with maybe a few GICs and bonds, and in total, your investments are making you about 5% a year. Now, you can do this by picking individual stocks on your own, or you can invest in things like mutual funds or ETFs, which help take the guesswork out of a lot of the investing. If you can start investing as early as possible, this is how quickly you can grow that $6,000 TFSA limit into a $1 million investment portfolio. Assuming you start investing once you're old enough to open a TFSA, you can hit that $1 million mark by the time you're 63. If you're comfortable taking on more risk, a successful stock portfolio could get you there even sooner. And this is assuming you never invest more than $6,000 a year up until retirement. Let's compare that though to someone who instead used their TFSA as a high-interest savings account instead. As you can see, by the time they reach the same age that your account is worth $1 million or more, their investment account is less than half of that. Now, to most of us, $440,000 sounds like a lot of money today. But with inflation, 45 years from now, that $440,000 may not be enough to retire. Assuming that the rate of inflation averages somewhere around 2% a year, by the time you turn 63, that investment account would be the same as someone deciding to retire today with closer to $180,000. Because with rising prices, it will cost us so much more to buy the same things today that we'll need to buy 45 years from now. Not only does what you invest in impact how much your TFSA will grow, but so will the age that you start investing. If you can start at an early age, you can hit your target a lot easier because your money has so much more time to grow. You won't need to save as much money every year, and you won't need to take as much investment risk. As an example, let's say instead you start saving once you turn 40. Now at that age, assuming again you're earning about 5% a year, you would need to save closer to $23,000 a year versus $6,000, or take substantially more risk in your investments to reach your goal. As we know though, rates of return are not guaranteed, so taking on more risk doesn't always mean a higher return. And in fact, you could end up with large losses forcing you to work a lot longer than you want to. If you're just starting out, the most important thing is to just start investing. We have some great beginner videos that break down the basics of a variety of different types of investments, and also tips on how to boost your returns, pay lower investment fees, and make sure you're picking the right investment account. We hope you found this video helpful. Thanks for watching, and we'll see you next time.